Where do you see the opportunities, given it's obviously going to be a pretty bullish run-up? We've got the Fed, perhaps 25 basis points already locked into expectations, big tech earnings as well. Where are you looking?
We are looking at things that are still recession resistant. I know it's been a monster month here in US equities, and it's mostly been led by the short covering and the growth stocks that everybody wants to return to 2021. But really, the economic data as a whole doesn't look like it's getting any better and could get a lot worse. So I think the opportunities are in non-cyclical stocks and value stocks, because you really need to get paid to weather a recession here. You can't just buy something at 20 times earnings and hope you're going to make it through.
Is one of the recession-proof areas energy?
I know it's strange to say, but absolutely. Energy is one of the biggest positions in the Frank Value Fund because they're priced effectively. They have some of the best balance sheets that we've ever seen in the energy sector. In fact, for most of my career, I didn't invest in these stocks because of the lack of capital discipline and because of the tough balance sheets. But now the whole sector looks like it's going to be in a net cash position. And there just isn't enough supply still. We see China potentially reopening. We see some potential supply shocks coming from the Middle East. It might be a great time to actually weather the recession in energy, which is a strange thing to say, but the numbers don't lie.
Brian, why the conviction that we're going to have a recession? It sounds like you think it may even be more than just a shallow recession if we do get one.
Well, I don't like to be all doom and gloom. I always like to find, as a stock picker, opportunities that can get you through. But I'm also follow economists. And you look at the macro numbers, from the PMIs to the leading economic indicators to the inverted 3-month to 10-year yield curve in the US, they're all flashing recession, and they all have a pretty good track record. So I'm just telling clients, let's be careful here and make sure we're getting paid for it. Make sure that margin of safety is there in your equities. It's not a great time to be a broad-based investor because you're not getting that low valuation that could potentially get you through a recession with good returns. You really have to be careful and pick your spots.
The Fed, though, could pause, right? If it looks like we're going into recession, the Fed will be able to potentially see that in the jobs data or in consumer spending data or in other data, and it can just pause, no?
Yeah, I think investors have been begging for that pause for months and pricing it in, at every turn, and then the Fed disappoints them. But we will get a pause eventually. I think it's inevitable. However, if you look back at history, it's not a great time to be investing when there's a pause or even rate cuts at the Fed. The Fed is really bent on fighting inflation here. And if they pause or if they even start cutting, you have to ask yourself, what are they seeing in the economic data that they're going to completely change their attitude here? So in other markets like 2000 to 2001, when the Fed started cutting, it was a very bad time to be investing because that's when the economy and earnings were turning over. So I don't think a pause is a great thing here. I think you got to be a little bit careful.
Brian, are you looking to get different exposure to China right now?
We see our exposure to China through the energy markets because energy is a global market. And like I said, there's not a whole lot of supply coming online. In fact, the supply in the US looks like it's decreasing. So I know there's a lot of argument over when China is going to start buying oil again, because there's a lot of existing supply in China. There's a lot of storage, et cetera. But just looking at the market as a whole, and they're talking about stimulus there, it's a great way to get exposure to China is to be in some US oil companies because it is a global market and there's not much supply even coming from OPEC plus.